Hello everyone and welcome to our channel, where we share stories that shape our nation. Today, we focus on a critical issue, the National Flood Insurance Program, or NFIP, set to expire at midnight, September 30th, 2025. Insuring 4.7 million policies worth $1.3 trillion, the NFIP is America's shield against floods. If Congress fails to pass a spending bill, it halts, stopping new policies and renewals as hurricane season peaks and winter storms near. This threatens homeowners, renters, and home sales, especially in Florida and Texas. Join us to explore the NFIP's origins, its vital role, the fallout of a lapse, voices of those affected, and the urgent need for reform to secure a flood-resilient future. In the 1960s, floods devastated America. The 1927 Mississippi flood displaced 700,000, and 1960s deluges cost billions in aid. Private insurers refused flood coverage, leaving homeowners vulnerable. Congress passed the 1968 National Flood Insurance Act, creating the NFIP under FEMA. Its mission: offer affordable insurance and enforce floodplain standards in 22,500 communities, requiring elevated homes and restricted development. The NFIP insures homes from coastal condos to inland farms, tying coverage to mortgages in FEMA's special flood hazard areas, with a 1% annual flood risk. The NFIP is a partnership. FEMA maps risks and sets rates. Over 50 private insurers sell policies via the Write Your Own program. Policyholders pay $4.6 billion in premiums yearly, funding the National Flood Insurance Fund. It supports 500,000 home sales annually, per the National Association of Realtors, as mortgages in high-risk zones require coverage. Since 1978, it paid $75 billion in claims, including $1 billion in 2023. Floods, America's top disaster per NOAA, hit every state, costing $8 billion yearly, claiming 100 lives. Only 4 to 6% of homes have flood insurance, leaving a $1.3 trillion gap. Florida, with 1.7 million policies, has 12% coverage. California, 0.5%. Private insurers, with 14% market share in 2024, offer costlier options. Legislation shaped the NFIP. The 1973 Flood Disaster Protection Act mandated coverage for high-risk zone mortgages. Hurricanes Katrina and Sandy, costing $24 billion, led to the 2012 Biggert-Waters Act, phasing out subsidies for risk-based rates. Premium hikes prompted the 2014 Homeowner Affordability Act, capping increases at 18 to 25% and keeping grandfathered rates. Risk Rating 2.0 in 2021 used elevation and rainfall data for precise pricing, sparking affordability debates. The NFIP's $23 billion Treasury debt, swollen by $2 billion for 2024's hurricanes Helene and Milton, highlights solvency issues. Subsidies for pre-1975 homes, 20% of policies, keep rates low but deepen deficits. On September 30th, 2025, the NFIP's authorization, last fully reauthorized in 2012, faces its 34th short-term extension since 2017. A 13-hour lapse in March 2024 caused little harm, but a full shutdown risks chaos. Without a spending bill, new policies and renewals stop, though claims draw from $1.685 billion in the fund and a $1 billion borrowing cap. With hurricane season active and winter floods looming, timing is dire. Tropical storm Imelda's path shift signals risks. NOAA notes 20% more frequent floods per decade. Florida faces 14,800 stalled monthly closings. Texas, 3,500. A 2010 lapse derailed 1,400 sales daily. Today's market could suffer more. The human toll is stark. Maria, a Tampa mother, sees her FHA loan stall without NFIP coverage, delaying her home purchase. James, a Houston renter, can't renew his policy. A flood could mean eviction. Nationwide, 4.7 million policyholders, from Miami to Missouri, face exposure. Renters' contents coverage becomes unattainable. The housing market, strained by 6 to 7% mortgage rates, risks turmoil. Shannon McGann of NAR says, each day a shutdown continues, the housing sector suffers. Francis Torres of the Bipartisan Policy Center ties it to broader crises: paused vouchers, furloughed FHA staff, and sidelined buyers. A protracted shutdown worsens the housing crisis, he says. Home values could drop 5 to 10%, hitting jobs and retail. Communities suffer deeply. Florida's 1.7 million policies show its vulnerability. Texas Gulf cities face stalled rebuilds post-Imelda. New Jersey's barrier islands risk winter losses without renewals. Inland, Kentucky's 2022 floods and Missouri's 2019 deluges prove floods need no coast. GAO notes FEMA's outdated maps miss new developments and climate shifts, leaving 13 million in moderate risk zones underinsured. Only 78% of at-risk homeowners have coverage, 43% NFIP, 35% private. Premiums average $900 yearly, but Risk 2.0 pushes some to $2,000. Awareness lags. 22% in flood-prone areas underestimate risk. Yet, communities show resilience. In Cedar Rapids, Iowa, post-2008 floods, Sarah Thompson rebuilt higher using NFIP's increased cost of compliance grants. In Miami, workshops teach families to protect valuables. Sarah, now an advocate, says, "The NFIP gave us a second chance, but others need it too." These stories show the program's role in fostering preparedness and hope, empowering communities to rebuild stronger. Solvency is a challenge. The NFIP's $23 billion debt balances affordability and deficits. Risk-based rates could triple costs for low-income policyholders, 40% of total. Private insurers push market solutions, but NFIP dominates high-risk zones, with 90% of Florida's policies. Borrowing covers claims like Katrina's $16 billion, but interest grows. Reform is urgent. The Association of State Floodplain Managers seeks updated maps and stronger grants. Bipartisan bills propose Representative Jared Moskowitz's 2026 extension, Senators Cassidy and Booker's tax credits, and the NFIPRE Act's $400 million for mapping and rate caps. Amanda DeVeckerinier of New Jersey Organizing Project says, "Storm survivors deserve stability." Reform faces hurdles. Solvency needs a $1 billion surplus without borrowing. Equity demands affordable rates. NOAA urges climate-integrated maps, noting 30% higher flood intensities since the 1950s. Private market growth via NAIC tax exemptions could help, but high-risk areas need NFIP. Digitizing claims and centralizing data could cut delays. FEMA lags private insurers. A 5-year reauthorization with subsidies, mitigation, and debt relief is proposed. A House bill eyes a November 21st extension, but long-term stability is key. As the deadline nears, realtors urge securing policies or private options. Lenders prepare contingencies, like suspending requirements. Bipartisan leaders, Johnson, Schumer, Scalise, push extensions, with Moskowitz's pact targeting December 2026. History offers hope. Short lapses caused minimal disruption. The NFIP is a promise to protect homes where memories are made. Congress must renew it to ensure resilience against floods. Policyholders, call your reps. Lawmakers, act now. Communities, stand united. Thank you for joining us. Let's advocate for a future safe from rising waters.